Well, hello and welcome to Bloomberg Quint. And right now we are in conversation with Devin Choksi of KR Choksi, where he is going to tell us all about that can be taken away from this US presidential election and, of course, its impact on the markets. So, with that, Shraddha, do you want to go ahead and ask the first question?
I will, but Ankam, I just want to highlight, as you mentioned, two big developments that really happened today. One, of course, the US presidential election outcome, where the most unthinkable thing has happened.
Yes,
Donald Trump has won. And secondly, we also had the overnight news on Prime Minister Modi's crackdown on your black money, which Bank of America Merrill Lynch actually calls as the mother of policy shock. So both those events that actually contributed to Nifty falling. But Mr. Devin, bringing you in, I just wanted to understand what is your view on the markets in the back of both these developments. One, of course, the US elections, and secondly, the black money crackdown.
Good afternoon. Certainly, I think the underlying threat was on the currency side for both the events. If you look at, I think, the Donald Trump event, I think the larger part of the fear before the election result came out was that if the currency starts going haywire, then probably I think it would land into some amount of collateral damages to respective countries of the world, including India. And that's where I think our markets sold off, I think, in hurry at the same time. Even I think you look at the event which happened yesterday evening, late evening, wherein I think the Indian government basically cancelled the 1,500 rupee note from circulation. Again, I think it posed some kind of a situation of uncertainty, wherein I think people thought that I think it would lend to some amount of liquidity crisis. Both these factors played its role in the minds of the people, if not I think on the markets during the morning hours, and as a result of which I think without volume the market panicked and market probably I think went down. With the I think gradual improvement in the sentiment and the understanding on the subject coming in, plus US election results are now out, and I think the presidency elections suggest that the currency is not going to probably go haywire. In such situation, I think the market has bounced back and recovered. So I think the key issue in this entire thing is I think the behavior of the currency and the prediction on that part, I think, which probably led to a fall. And I think because of I think non-existence of that particular fear now, I think the market has resulted into some kind of a short covering led recovery also.
So we have seen a very sharp recovery on the benchmarks, especially the Nifty, which had a hit a low of around nearly 8,000 today. Now, what we've seen in the past few weeks is an outgo of FIIs funds, and based on the fact that we've seen a recovery in the last couple of hours of trade, can we expect these funds to come back into India now that the big events are out of the way?
So I think certainly there is a good possibility of funds coming back into India. Largely, I think those funds who shifted out of India were the ETF funds, I think, who wanted to probably play safe, and I think never wanted to take a chance on the currency side of the failures. So therefore is why I think they were sailors and they pocketed the funds or kept that funds on reserve side. Now that the big event is over, probably I think that fund will have to come back into India. On the contrary, I think with this particular currency situation, I think in India, which is basically resulting to brighter prospects for the country, my reading says that I think a larger part of the funds would come into the country, and that to come with I think probably a rush, because on one side Indian currency is reasonably behaving well. On the other side, I think with the black money system getting cracked, we are expected to see about 1 lakh crore plus kind of an amount coming into the tax kitty of the government eventually. Now, if that is so, then I think the fiscal deficit situation would remain fairly under control going forward, and at the same time government would have more measures to take as far as I think the economy revival is concerned and the project revival is concerned. So global investors would probably bring in more money because of this favorable situation happening on the fiscal side of the economy. My reading says that I think the corporate earnings also would start looking up, because I think more inclusion of taxes, more inclusion of investors coming into the fold probably would mean that I think higher amount of growth possible as far as corporate earning is concerned. So I am reasonably optimistic on this front that global investors would return back with force as far as I think India economy and the investment in the market is concerned.
Devin, since we were talking about the black money and its impact on the markets, two sectors have really taken a beating on the back of that. Not surprisingly, real estate and also some of the jewelry stocks. But what is your take on the real estate stocks? Now, would you really stay away from them?
I think they are the ones who have been given signals earlier also that they better need to, I think, bring their businesses into the books, and which has not happened. So unfortunately, I think this has now probably happened to them, and they would probably, I think, start coming into the books. I think that would be a good sign for the economy as a whole. But in the interim period, those transactions which are pending transactions against cash receipt, etc., I think they will come into a subject of inquiry too at the same time. So yes, I think the real estate is really, I think, a confusing state at this point of time. Maybe the buyer and seller transactions might get affected for a while, and it could result into some kind of default, and which could affect, I think, some of the industries also eventually. So in the near future, I think there is an uncertainty element into the real estate space. Bullion space is equally, I think, I would say, spoiled space, wherein you have higher amount of, I think, black money activity going on. I think again over there, there is a significant amount of need to restructure this particular space, and my reading says that I think we would have a situation of uncertainty continuing in both bullion as well as real estate space for some more time.
What about the impact on some of the housing finance companies or NBFCs, especially the ones having a higher share of LAP loans like Diwan Housing Finance or even Shriram City Union Finance? All of these stocks have seen a much bigger beating than the peer group.
As I said, that I think uncertainty to the customer would result into uncertainty to the banks also, and maybe I think some portion of uncertainty would go into I think some amount of non-recovery situation for at least near future. I think many of the housing finance companies like LIC Housing Finance or HDFC for that matter, they have exposure towards LAP, but my reading says that I think they have been operating with a very stringent norms, and they have been selecting their promoters very, very well. So probably I think they may not have as much of a cash related transaction situation is concerned as much as some of the other mid-size AMCs are concerned, I think, who have been basically, or NBFCs are concerned, who have been lending against the property. So to an extent, I think you will have to segregate the types of player who have been more stringent in following the norms vis-a-vis those who lacks those norms. So I would think that yes, it would be a situation of some amount of challenge on a project to project basis for some of the NBFC companies.
Okay, so we have seen the recovery today led by pharmaceutical companies such as Lupin Sun Pharma as well as Dr. Reddy's, which is the biggest gainer today. And these stocks, of course, have been under quite some pressure owing to news and how the US FDA has cracked down on pricing policies. What and how do we deal with the pharmaceutical sector now, given the fact that we've seen a little bit of recovery in these stocks?
Well, I think we have been reasonably confident about Indian pharmaceutical companies, and even if the Department of Justice's inquiry pertaining to the generic drugs basically working in connivance with, I think, the other players, or maybe I think for the price rigging part of the inquiry over there, I would think that Indian pharmaceutical companies in their generic business would come out clean, because I don't think that they have enjoyed the monopoly situation in most of the cases. So to a greater extent, I think I don't see, I think, that particular threat as a bigger threat. Though because of that, in the last week the pharma stock fell, and today also because of the nervousness in the market, I think they fell in the morning, but they very sharply recovered. My reading says that I think we have fairly good visibility about the pharma companies and their earnings for FY18 and FY19. So to a greater extent, would like to believe that any correction of any small degree or even larger degree in pharma space in select companies, of course, I think one would see the buying opportunity coming in there.
Okay, David, that was pharma. Again, another sector in the backdrop of the US elections, and now that the clarity has emerged, how would you view IT stocks? Donald Trump has always been or spoken against outsourcing. He's not in favor of the Indian outsourcing that happened. So given that the IT stocks have corrected this bit, do you really think this fear has already been priced in, or how would you, what would be your stance on some of the large cap IT stocks now?
Well, I think before you run for the presidency, and I think election campaign speeches, and after you become a president, and I think then start sobering down your tone, they are two different things. What I'm trying to say is that I think that as a president, I think you will operate with far more disciplined approach and not irrational approach, I think, which you operated with, I think, in the pre-election speech. So I would like to take a call that yes, I think after assuming the office, he would probably work more sensibly, and I think probably mind his I think entire approach towards the subject. Indian IT companies have been generating jobs in America for sure, and I don't think that I think they particularly I think should be victimized by in the name of I think stopping of the outsourcing. At the same time, I think from the economic reasons also, I think many of the activities will have to be outsourced, I think come what may. So in such situation, I think I don't see too much of a threat coming onto the IT company. Secondly, he himself has campaigned and extensively said that he would like to make India as their partner of choice. So which means that I think vis-a-vis China, India would have better stand in front of America eventually, I think, with the new president coming in. If that is a situation which is likely to materialize, then in such situation, I don't think that I think as much of threat as we have probably seen earlier in his speeches, I think would exist eventually. So would not be very uncomfortable, would stay put on I think putting any further apprehension on the subject.
And finally, considering the fact that we've seen a correction in the markets, which pockets do you see the most value in as far as investments or some short-term trading strategies are concerned?
Well, I believe that I think in many areas, many sectors, many companies are available at a discounted valuation. I for one would like to believe that even if the market may have tanked today morning, some of the stocks probably tanked I think faster than the market, and probably I think they made their bottoms. According to me, I think some of the good quality stocks in the BFSI space, some of the good quality stocks within the agricultural space, even in capital goods segment, I think where they are supporting the transmission distribution kind of an activity particularly, I think they might see relatively a better outlook going forward for them. So I am reasonably confident about I think some of the large companies as well as some of the mid-sized companies operating well in coming period. The reading says very clear at this point of time that one should be looking at individual stocks more than the market as a whole, because some of the companies have actually become very attractive with the valuation, and that's where I think one can put more money into the portfolios, buying some of the quality stocks.
Just the last question, Devin, just wanted to understand what would be the major triggers or cues that you would be watching out for in terms of going forward right now, given that all these major uncertainties are over. What are the key things to look out for?
Well, I think clearly few things. The uncertainty pertaining to the currency behavior I think is the most crucial thing. If currency is misbehaving, then probably I think we have a real threat of withdrawal of money from the system. But if currency is not misbehaving, then I think we are safe, as I would like to put it in a straight one line. Second aspect about is that India is basically offering a giga size opportunity to the global players. On one side, I think the government is determined to I think kill the black money and parallel economy, which would allow more confidence of international investors to invest in India, and that according to me is going to be a game changer. If that is the case, then in such situation in coming months we would be seeing larger amount of money coming into the country, both from the portfolio investors as well as from the project investors. So I am really optimistic on that front, that this reform that the government has initiated on the currency front, and probably I think that could be the word I think which would spread across the globe, and that would probably bring larger amount of growth into the economy, eventually resulting to faster growth for the earnings of the companies. So I think keep an eye on this particular aspect, where I think the size of money would increase as far as the inflow is concerned in the Indian economy.
All right, Devin, thank you so much for joining us. We really appreciate you sparing us your time. Thank you so much for joining us. All right, so Agam, that was Devin Choksi telling us what he thinks about the markets, but the markets have fallen. Nifty has seen an absolutely strong recovery. In fact, we've made up for all of our losses. So about we fell to a low of about 8,000 in the opening trades, and that is the time when we had the twin impact of course, your black money crackdown, and also the fact that Hillary Clinton versus Trump, the markets were trying to understand who would actually emerge as the winner, but after Trump won, we have seen that kind of rally coming in. So we've risen about 350 points, so recovered 350 points since our opening trades itself. So for the day, the Nifty ended about 1.3% or 110 odd points lower at 8400 levels, and it was mainly the pharma stocks and PSU banking stocks which actually drove that recovery. So later recovery coming as far as Nifty is concerned.
Right. So as far as your futures and options space goes, we have seen shorts build up. There's no doubt about it. But we also have to remember that we had we began the day with a very, very deep correction. And that's also the reason why there are still some shorts in the system, though we have seen some recovery and some covering of those shorts. But for that, we'll have to wait for the power copy to come in. But there is no doubt of the fact that there has been some more weakness in the market. We do not know about how FIIs are going to come in and when are they going to choose to start once again placing their bets in ETFs as well as some other big stocks. But with respect to our own markets, now let's take a look at what's happened in the options market today. There has been, of course, no surprises there, a lot of activity in the 8,000 put, where we've seen a lot of writing there, as you can see here. This is of course because we touched the 8,000 mark and we came back up. Similarly, on the other hand, we've seen a lot of activity in unwinding or in the 8,500 put. Now as far as maximum open interest is concerned, that continues to remain in the 8,200 and the 9,000 levels, but we once again are looking at a lot of resistance towards the 8,600 mark and a lot of support or a substantial amount of support at around 83. So, this is the setup we are going into after the big events are over, and we will have to wait and watch as to what kind of bets the traders or options are making a writing on, and that will also determine the range that we're looking for as far as the November series is concerned.
So that was for the equity markets. I just also want to give a brief on how the bond yields are doing. So the Indian 10-year bond yield has fallen about 12 basis points to 6.67%. That is the biggest fall since 12th September. So a good rally coming in the bond prices. This was expected even on the back of the black money crackdown that we were expecting this run up to come in. If you talk about the rupee, the currency market, the Indian rupee also reversed losses to appreciate by about 18 paise to 66.44. Again, this is the highest level in a little over a month. But overall market breadth was also it was obviously on the negative side, but a lot of advances is what we saw. So the trend did improve by the end of the day.
Yes, so we've already addressed some gainers in the Nifty. With respect to what's happened in the broader markets, and there are no surprises here. You are looking at only about 111 advances against 389 declines in the Nifty 500 stocks. And I'm going to start off with some of the losers, considering we have seen a decline in the markets today. So we have Suntech Realty, and it is the entire Realty pack which has been torn to shreds today. Suntech Realty down on a lower 20% circuit. Delta Corp, Indiabulls Realty, HDIL, DLF, all of them taking hits of well over 16% in just one session. We have more weakness in GM Financial, and as you can see, we have more realty names in the top 10 losers here. So you have Anantraj, DB Realty, Kolte Patil, etc. Moving on to the gainers, and we do have some. So we have Swan Energy once again building on its gains, up 11%, PTC India Financial, VA Tech, Karnataka Bank, and Alchem Laboratories among the mid caps, gaining to a certain extent, but today's day of trade once again is clearly towards the losers. Are there any more movers that you'd like to point out towards, Shraddha?
Agam, I'll just talk about the Nifty index. As you already mentioned, it was the pharma and the PSU banking stocks which really led that later recovery. So not surprisingly, you have Dr. Reddy's, Sun Pharma, Lupin, Aurobindo Pharma, all the pharma names figuring in the top list of Nifty gainers. Lupin, of course, was also on the back of its earnings. Nifty, the net profit for the quarter grew about 58% to 662 crores, but still fell short of analyst estimates of about 708 crores. Nevertheless, some recovery and bounce back coming in, given that these stocks were beaten down. On the losing side, you had Ambuja Cements, TCS, Ultratech Cement, Maruti, Tech Mahindra, Aisha Motors, Mahindra and Mahindra. So a lot of your auto companies and IT stocks were amongst the losers. So that's as far as your nifty movers and gainers were concerned, Agam.
Well, but it was a very exciting day. Can we expect more excitement in the next couple of days as well?
I'm not sure, Agam, but I'm assuming that we should continue to consolidate or probably be in a range bound sort of a movement that we should see on the index over the next 1 or 2 days, because it's one, of course, the US elections plus a little more clarity in terms of how this whole black money crackdown really evolves,
Right.
plus how the banks are going to be able to manage
Right.
all the cash note exchanges. Of course, this entire episode is expected to have a positive impact on the banks. It's expected to give a big boost to their CASA ratio, because people or analysts are expecting people to go and deposit
Right.
that money instead
Right.
of just exchanging. So good in terms of their CASA. So we will have to see how that pans out. But I'm not sure. We shouldn't really be looking at some big bag movements.
But
at
we
least
do
for the rest
have
of the
big
week.
earnings too, as far as the banking space goes.
That's correct. So in terms of big earnings, you have your SBI and Bank of Baroda. They're expected only on Friday. But in terms of earnings to watch out for tomorrow, the big earnings, you have Sun Pharma, you have, so you already had Taro Pharma numbers today. They were more or less in line with what the street was expecting. Manappuram Finance, Motherson Sumi, Power Finance Corp and Tata Chemicals is what we are going to be watching out for. So we could be looking at some stock specific movements. But that's all from us today. We'll see you back again at the same time tomorrow. Stay tuned in to Bloomberg.